What I'll say is I think it's evidence that it's a huge relief that there's at least some impulse to take an off-ramp here. And last night when we saw Treasury yields blowing out and we saw the 10-year hit 4.5%, these are dynamics that happen when there is like extreme stress, illiquidity, run dynamics happening in financial markets. That can't persist very long. When you see moves like what we saw last night, I know the Secretary Bessent there said this was not a response to what we were seeing in market volatility, that it was all, art of the deal, et cetera. Nonetheless, clearly the markets were under extreme distress. And I'll just say a couple other things. The market is, I'm looking at Nasdaq 100 futures. They're still down 5.5%. The China tariffs are still huge. That's going to be, a huge effect on lots of American companies. There's the 10% sort of floor tariffs. Those are still in place. So, look, I think it's a big relief that obviously some of this has been delayed, but I think there's still quite a bit to work through here at a very minimum before there's some sort of like true all clear. Every major index is still like deeply in the red on the year. S&P is down 9.6% on the year.
Yeah, wow. Joe, it's great to have you with us here as this evolves before our eyes. One of the reporters in the driveway asked a really important question of the Treasury Secretary. Why should investors have confidence that this isn't going to change again in the next 12 hours? These just took effect at 12:01 a.m. Speak to the psychology at this moment on Wall Street.
I mean, I think there's two things. It's like, one is like, yes, we've now seen that these headlines can change all the time. I guess like it seems plausible that, okay, for the next 90 days, you get some sort of respite on the non-China companies. But I think even outside of stock market, you have to think about actual business investing, hiring, et cetera. And we've seen the business side sentiment surveys absolutely horrendous. We haven't gotten a lot of hard data that really speaks to what was happening economically in the middle of March. Earlier in the week, we heard Larry Fink. He said every CEO that he talks to thinks the recession has already begun. Jamie Dimon talking about recession being the base case. So even with the 90-day pause in the non-China countries, it's worthwhile to think about like what the last several days have done for the business community in terms of saying like, wait, you don't know the rules. Now we don't know what the rules are going to be for like 3 months probably. And so we continue to have this environment where if nothing else, the trading relationship is highly uncertain, which at least in the short term is not conducive to investment. But they would probably argue, it's short-term pain for long-term gain.
Mm-hmm. Well, it's incredible that these headlines hit in the 1 o'clock hour ahead of the Fed minutes, which are due to come out just a few minutes from now, Joe. I guess whatever news we might have seen in them probably overshadowed by these developments, keeping in mind it's backward-looking minutes and they didn't know what the tariff levels were going to be in the first place, let alone that they would be pulled back. But it speaks to the kind of uncertainty we keep hearing Chairman Powell talk about as to why the Fed isn't enticed to move in any direction because so much is so unclear.
There's so much that's so unclear. Short-term market-based inflation measures going up, long-term ones going down. So much uncertainty, soft data going down, hard data still going up. And the other thing is, speaking of uncertainty, look, we all heard the White House's presentation there about the art of the deal, and China has now been goaded to being revealed as the bad actor, et cetera. And okay, that's a fine story. However, last week at the Rose Garden, those reciprocal tariffs were very specifically presented in such a manner that every country that runs a bilateral trade surplus with us, which is almost every country, was per se engaged in bad acting. That that's the whole premise of reciprocity. And so, it's clearly not presented that China was anything particularly special last week. The story has evolved. The story has evolved whether it's negotiations versus non-negotiations, et cetera. So, again, I'm not surprised that there is this sort of massive sigh of relief. We actually knew that there would be a massive sigh of relief on Monday when we got the fake headline about a 90-day pause. So we knew the market was looking for something like this. But I think there's still a lot of question marks about the sort of what any negotiations would look like and what kind of economic degradation we see in the meantime.
I'd love to hear the Trump interview on Odd Lots, I have to say. We've only got a minute left, and we want to clear out in time for Fed minutes, Joe. But we heard the president said last night, this is a great time to buy. said that this morning, in fact. Everything is going to work out well. Is there a world in which you're allowing him to eventually be correct?
Yeah, of course. No, I hope so. Like, there's a few things. It's like, one is obviously you hope to have like a prosperous global economy, which would be fantastic. Even prior to the Trump administration, there's been a lot of anxiety about the nature of both the U.S. and really everyone's reliance on China for domestic manufactured goods. Obviously, the Biden administration tried to affect change on that respect, at least with respect to sort of like cutting edge tech, like semiconductors, et cetera. There is a lot that could be better about the world. Again, when you look at how much the markets sell off, that's really indicative of like investors are much more pessimistic than they were about the state of the world than they were at the beginning of the year. But look, I like I said, I understand, and I think it makes total sense why there's this massive sigh of relief happening in markets right now.